We're joined by Michael Farrell, Chairman and CEO of Annalys Capital Management. Michael, thank you for joining us. Michael, the CMBS market is stuck in neutral right now. When can we expect to see it pick up?
The real key to the CMBS market taking off again has to do with the valuations on the underlying real estate. As the Fed and the Treasury work through the different aspects of all the real estate crises that are emerging in the markets, they've created liquidity that's similar to the CMBS and its HALF programs and the other acronym programs that are out there. The CMBS market will start to take place after those underwriting criteria are cleared up.
And is your company focusing on any special niches within the debt markets?
We focus on three different aspects of the residential, which is agency-backed, non-agency, as well as the CMBS markets for different public entities. So Annalys takes care of agency, which is government-guaranteed Fannie, Freddie, Ginnie paper. Our other REIT, which is Chimera, takes care of non-agency paper, non-guaranteed paper. And then the final one is Crexus, which takes advantage of the different markets that are in commercial. So we look at a broad spectrum of different kinds of real estate cash flows underneath all of these guarantees and securitizations programs.
And you mentioned the government-sponsored agencies, Fannie and Freddie. What's your long-term outlook there?
We think that Fannie and Freddie are going to be around for a long time, but their role will be limited to be insurance companies within the real estate sector. They're not going to carry the same sorts of portfolios of securities that they did since the 1980s. That's being withered away and taken out by the private sector, by companies like ours, which come in and provide support for real estate housing through that. However, from an underwriting criteria, I think that it's safe to say that Fannie, Freddie, and Ginnie Mae are always going to be the insurers of first recourse within that market.
And with all the changes that are taking place in the mortgage-backed securities market, how do you think your day-to-day business is going to change at Annalys?
Well, I think that the mortgage market is really doing a back-to-the-future scenario. We are looking at the real estate market moving back towards more private underwriting. The government will eventually begin to ease itself out of these markets. That will help with the recovery and the realization of real estate valuations underneath it. Day to day, the way that is repaired by the banking system is through the evidence of a steep yield curve. So I think for the far-ranging future, we're looking at a steep yield curve. We are in a deflationary aspect of this economy, and that is going to be more pressure on asset prices. As those asset prices find their true value, then investors like us step in.
And a lot of attention has been paid recently to federal policy regarding interest rates. What's your longer-term outlook for short-term interest rates?
We think that they're going to be extremely volatile. But however, the shape of the yield curve will remain relatively steep, meaning that longer-term assets are going to yield higher rates than short-term assets. As this economy unfolds over the next couple of years, I think that you can expect that interest rates are going to bounce around between a 0 and say 2% range from a nominal point of view. However, the mission of the Federal Reserve will be to stimulate growth in the economy, so they're going to keep those rates relatively low compared to the other sovereign rates around the world, which don't have the same tools and mechanisms to repair their economy as we have in the United States.
All right, Michael. Thank you for joining us.
Great to be with you, Alan. Thank you.
For more information on this and other REIT news and analysis, check out REIT.com.